And a very good morning to everyone, and welcome to the TriggerCharts pre-market rundown for Friday, July 30th, 2021. I'm Andrew Horowitz, and I am the co-founder of TriggerCharts. Thanks, everybody, for joining me today. We have a lot to talk about. It's a pretty busy morning when it comes to markets right now, and what we're looking at is a very significant downside move due to the fact that we saw that there was a miss by Amazon, and that really obviously taking things down, as Amazon is a major component of the NASDAQ index. You look at the top of my screen right now, you'll see that we are seeing the NASDAQ futures down about 170. The Dow Jones only down about 89, and the SPOOs, or the S&P 500 index futures, down 27. Before we go any further, I want to mention that, of course, investing involves a substantial risk. Past performance is not a guarantee of future results, and this is for educational purposes only. As always, use your best judgment when investing. What we're doing today is we're talking about the setups. We're talking about how to define where the line in the sand is to make sure that you understand, is it a bias towards the long side? Is it a bias to the short side? Should I just be staying away because, well, it's consolidating? And what we've done is we've created a package that is pretty substantial, because what we do is we look at every single tick of every single market, of every single stock and future, and we plot them, add that to the price, and start to aggregate all of that into a formation that provides us a very good look into the markets, an x-ray, if you will. And what you get out of that and what we provide as the output is a relatively simplistic but yet very powerful way to look at things. And what they are is color-coded, as you see on the right side of the screen, and you see the three lines. That's it. Now, there's a few other little things that we have in the package, but I'll mention to you, of course, we do have the special offering that anyone who does sign up for a new subscription, so new subscribers to the Commander Series, gets a 4-hour Traders Playbook Advanced Coaching Series, which is normally about $199 per person, which people do pay quite often. It's an evergreen. If you do subscribe, and you are subscribing, which I really would suggest that you do, send us an email at support@triggercharts.com, and we will make sure to get you going with that. All right, now, last thing I'll mention, then we'll go through what's going on right now. If you have any stock symbols, whether it's futures, whether it's currency, whether it's, Bitcoin, whatever you want to look at, put the symbol into the chat. I will type the word here in capital letters with an exclamation point. There you go. And we will get to those. Let me tell you what's going on here, though. We have the end of the month that's happening right now, and yes, it has been a bit of a roller coaster. Not substantially outrageous, but if you look to the right here, I will share with you that there's something very significant that pops right out in my head and to my eyes as I see it, and that is the incredible perfection of the support right there. You see that Qs? This is the NASDAQ Qs, the ETF of the NASDAQ 100, came right into support. Right there, bang. And then it drove right up. We have a new upside target hit right now, trading at, let's see, 362. Look at that. Right now, where it's trading right now, 362.39. Where's your next support? The blue, it shows it right there, 362.15. Only a few pennies off in the pre-market on the midterm support. Now, I don't think that's a really good support level. Frankly, I'd like to probably bet on the 360 and change as the next level of support. That would be significant. So, do something like this quickly if you want. I'm big on this. Actually, we'll take this line. We'll just repurpose this line and say that right about there. Again, within a few cents. Don't get crazy. I'm going to tell you something right now, and I want you to pay attention to this because I think it's really important. A lot of people get crazy with the exact down to the penny number. Within 10 or 15 cents, even a quarter, on a $366 name, within a few cents is fine to be right on. And you'll notice that we did see that get right back to support a few days ago, getting right into this support level right now. And as I mentioned, we get very, very close to that. This one was low of 352.04, and the store was 351.92. So we're talking about 10 cents, right? So remember, we don't have to be absolute, just right in that range. So don't get really chintzy and say, I'm going to wait till it gets right there. If it's getting there, it's not going below, maybe there's an opportunity to do something. We saw the same thing right here. When we look at this and you see these levels that get perfectly aligned to their support levels, here we saw a blow past, right? New formation, though. So go down a few times, blow past, but again, tack off these a few times, holding right on those levels. these support levels have been extremely important when it comes to the Qs right now. So you take that as a lesson for what's happening moving forward. All right, now, where are we? As I mentioned, well, we have the end of the month roller coaster ride. Powell and the Fed, well, they're constantly crafting some other reason, excuse, or other narrative to provide for the fact that they can continue on funding the liquidity requirements of the markets of the economy. And what they've done recently is said, well, inflation is going to be transitory. We talked about this idea over the last few podcasts. You know, they do DH Unplugged each and every week. If you're not a subscriber to that, I check that out also on The Disciplined Investor. Talked about the idea of transitory inflation. What the hell does that mean? Right? If we see over the next several months that we have, I'm just going to pull a number out of nowhere, if we see that prices go up by 5% over the next few months and really hot inflation that's 4 or 5 months long, and then we see it moderate and it becomes a bit more transitory, and inflation starts to get back to the 2% range, that does not mean that the prices that increased are going to go down. They're going to stay with the increase that they were and actually move up just a bit slower. So remember, they're crafting this whole nonsense because they need to make sure that interest rates are low to fund the government's extraordinary experiment with trillions of dollars of fiscal and monetary policy combined to see if there's going to be anything that really breaks loose and causes a problem. Right now, you know, are we seeing anything? Well, yeah, we're seeing some inflation that's happening, speculation waves that are happening, and that's something to consider. But again, lower for longer is the name of the game right now. And also, when we look at this, we're going to have to say that, you know, inflation is a transitory thing. Well, maybe. But the other thing they're going to start working on right now, definitely right here, is the pandemic outbreak. They're going to have that as cover because now, even if we have inflation, they're going to start talking about, well, you know, we talked about that we're going to shape the economic and the situation with regard to how we are going to work our monetary policy with regard to how the curve of the pandemic progresses. Well, now that we're seeing the Delta variant that is really pretty hot and all this going on, you know, you have to wonder, are they going to start utilizing that as a feature in their process? So that's kind of, there's something interesting on that. What else we have? Otherwise, nothing new really going on right there. Oh, let's kind of go over here. Let's take off that pesky little arrow. Earnings. Hey, we got to all admit, we got to say, and we got to all agree that generally speaking, even though there's some disappointment on the way the stocks maybe are reacting post earnings, fact is that earnings are substantial. Massive beats on the top and bottom. We saw that again today by several companies all throughout the week. I mean, whether it was technology, whether it was staples, I mean, really good numbers. Some warnings coming out about increasing prices of the overall inputs, inflation. Of course, we're seeing that there are some concerns about something very important. I think this is probably the most important thing that's going on right now. And that is that we are seeing that we are in possibly peak earnings. This area of peak earnings. Is it going to get much better than this? How can it get much better than this? You know, we saw this incredible liftoff, change of the economy, really a change of the fundamental workings of the economy, not only due to COVID, but because of the largesse of the governments providing incredible amounts of money. Are we at really the best it's going to be? Are we going to see growth levels of this? I would say, and I would argue, that we've seen kind of the point of peak earnings from with respect to growth. Now, earnings may move up over time, but I just can't imagine we're going to see these kind of numbers and beats like we're seeing right now. It's a bit of an aberration for a lot of different reasons. There's some financial, we'll call it tomfoolery going on, where there was some loan laws passed and some changes in the tax code for major corporations back during COVID that's still being utilized right now and having a very significant impact on and to the benefit of earnings. So we're thinking about also about COVID, right? Who are the benefactors here? Well, I want you to start thinking about this and making a list, because let me stop. Let's back up a second. Let's go back to January, February of last year. And if you recall, there was a time when we saw that there was something happening, but we all said, not over here. It's not going to happen over here. It's going to be over there. Okay, fine. I think we're all reasonably, at that point, reasonably accepting of the fact that, you know what, this isn't going to be any worse than anything we've seen in the past. it stays where it is, doesn't really migrate. These kinds of situations, whether it's Ebola or bird flu or swine flu or any of these things. Well, where we are right now is kind of in that potential area as well, where we're seeing that it's happening over there, right? The rise in cases and the outbreaks and the lack of vaccines, that's over there. Well, we have a lot of vaccines over here, so we're good. But you know what? We're seeing a rise again. Well, then we could say, but at the same time, while it's cases, you know what? It's really not as bad as it was. Hospitalization is not on the rise as much for the most part here. It's happening over there to a worser extent, a much worse extent. And, what are we going to really worry about? But I will tell you that it doesn't take a genius to figure out that, we don't know exactly how this thing runs. If we want to place all of our bets on a vaccine that we really don't have a lot of history with, I don't know. That doesn't mean you shouldn't get the vaccine per se or whatever your feelings are on that. But the point is, you know what? Why not look into where we can benefit from two aspects? Number one, complacency. Are we being too complacent with our portfolios? Where are the opportunities? Number two, hey, where are the hedging opportunities in the short side? And let's start looking for that. And number three, what will benefit? I mean, we're going to see a return to the stay-at-home plays, the mask companies, the vaccine manufacturers. I mean, these companies, we got some charts coming up on those, been doing very well. The distribution, like a UPS for cold storage, and even the labs. So start making a list and start thinking about where those are so you can be ready in advance. And remember, markets don't need to actually see the iceberg. They just need to see the tip of the iceberg, and they start moving things. So something to consider. Indices, just to kind of go through that for 1 second. Clearly we've seen all-time highs last week, been fading the last few days, coming in a little bit. We're seeing right now with the fact that today we're seeing a slant from the fact that futures on the Dow are down, but not so terrible as they are on the NASDAQ. Most of that is probably due to Amazon. Now, in economics, we also saw some good things happening here, but yet not as good as was anticipated. No one can argue that a 6.5% GDP number is bad, right? Okay, good. We got the GDP number that came out 6.5%, but a miss. Durable goods, 0.8%, a miss. Case-Shiller, massive beat. 20-city year-over-year average housing price increase 17%. Holy smokes. That's serious. Next week, we have a big week because we have ISM manufacturing. We have the employment report coming out and factory orders. So I mentioned, of course, about the 4-hour coaching course. Here's some of the stocks we're going to be looking at right here. And let's get to them. And I do see there's some of yours in there. I'll kind of mix them in. Somebody asked me about, let's go right here. What you're looking at is the Commander series, right? We're going to change this. We could change all the time frames all the time we want. This is on a week, daily. We're going to do shorter term. Look at this on, today we're going to do 60-minute. We'll see what's happening there. And this is Unity software in no particular order, what I'm looking at right now. What's interesting about this is that we are actually on a 2-day bias on the long side. Right here, you can see that. The yellow into the green shows that there's a long side bias. Unity software really needs to kind of get over the top middle of this. I mean, clearly over the 115, but if you get clear over the 112, you have some good traction on the upside. Got right to that. Look at that. Right to that yesterday. See that? You see where, let's get right to the peak. Right there. Right to the peak that I was telling you about yesterday. That tried to break out but couldn't do it. I pulled that number by just looking at the chart, looking at a cross-section from right to left, always looking right to left where the intersections are, and they were really kind of right about here, right? And clearly right there was a lot of intersection at the 100. Blew through that. Where's the next level? Well, you got some support, some resistance at 111 looking back in the chart, and you can go back as far as you want, but right there is where we're looking at back to February of this year. Pretty much the year-to-date is on your screen right now, and that's important to look at what the date range is. Where are we? But I looked at this and I said, I really need to get over the peak of this little island right there, so about 112, but we got right to the top of that and couldn't get over that. We did see that move for the supporting level, and I like to look at that. We see a stock come into support. There's a short-term chart, right? Roll down and hold that support really well, or in fact, get blasted and come back up. And this is a day that everything was getting killed in the market. This is an area that you start looking at. Got a very nice move to the upside here on a yellow bar, which is an alert for the long side, and then it just followed through. 102 to 112. Right now it's showing out. And that was at the close yesterday. It showed you to get out, and you would have been saving yourself about $3 on that. Someone asked me about MT. Looking pretty good. Looking pretty good. This is, let's kind of look at this a little bit longer term on the right-hand chart here. By the way, what you're looking at also is on the top here, this is the only multi-time frame that you will find in the trading app store for TradeStation, where you can see, for example, when the 30, this column's a 30, this is the 60, 240, daily, and weekly. So what you do with this and how you work with this and how you really get confidence, because that's all it is about these trades, right? We want to have good confidence, multiple indications to provide us for areas of confluence that provides us for a level of confidence overall. Now, what we're seeing is that, we go from right to left, we kind of go this way, right? We see, for example, on Amazon, long for 6 weeks, short alert on the daily yesterday. Interesting. I'm going to pull that up for a second and go back to MT. Amazon daily short alert. This weekly. Let's go back here. Let's go to daily. So we kind of crossed below that. On the close, you would have been in this position yesterday or getting in there. And right now, trading down to 3,300 and change, all the way down here. Make a few hundred shares on that. Let's see. 33.38. Where is that? Yep, right there, right at support, right at those lines. Again, draw a line and see, not knowing where it is today, let's kind of look. I mean, I would have said somewhere in this, right about here. What is that? So 34.16. A little bit off of that. Where is it now? 33. Let's see if there's any support there. Oh, no, I'm sorry. No, where did I draw that line? 34.20 I drew it. Yeah, so it's about 100 off of that. Where is it now? 34, 33, 38. Yeah. Not seeing a really good support level right there. I mean, there's some here. I mean, definitely, I would say that down to about, it's not too far off, though. 3,300. Yeah, I mean, that's the support level right there. 33.20. So you're not too far off, about $25 off on this, which you could easily crack to on the open. But let's get back to MT for a second. MT looking really good. This is on a daily basis here. Got this nice move to the upside. Consolidation, very important. Nice move off of that momentum. There's the aileron, which is an add-on. It's a momentum indicator that's very powerful. Combines, I would say, a dozen different indicators, wraps them, scores them, and then provides us an output. And basically that move from the upside where you saw it right there, where we got the level of significant support, and then it also at the same time started moving up, up, up on the momentum. That was a major blast off. Obviously, a very strong stock, ability to hold. There was a really nice level of overall, I would call it, consolidation for a while here in that range, but it stayed above that consolidation for most of the time. When it came back to that consolidation, simply held very nicely. So looking pretty solid here overall. I like this. Let's go down to, we looked at Amazon for a second here. DD, it's ugly. DD had a beautiful run from 7 to about 10. That's a pretty substantial move. Right now, trading down about 32 cents. Obviously, what I'd like to see here is a break above the $12 range. But right now, in this $10 range, I mean, 11.80, right in that center fatty part right there. It did in pre-market last few days ago go up to about 16 and change. There was some talk about it going private. Interesting play, very speculative. I actually like it. BioNTech, look at this. What this is? This is the Pfizer BioNTech company that provides stocks, shots. The other one is Moderna. How you like those charts? I mean, those are beautiful charts. Everything about them screams yes. Now, I will share with you that we are in a really good momentum on the upside. We're seeing everything look great, all-time highs, not a lot to really compare to. Clearly, this move up, this parabolic move up, is pretty substantial right now. That move just in the last 2 weeks from 230 to 312 on BioNTech. And then on the daily, this move, which is the consolidation of or the opening up of the weekly, you can see that in the daily basis. Clearly was a nice little signal right there, 230. That was a no-brainer if you're tracking the stock. If you're looking at it, you broke over all-time support. You got clearing, and then once you got over the top, look how it just shot up, gapped out, because now you have no more resistance at all. So this is a pretty substantial name right there. We also got somebody asking me about silver with a thumbs up on silver. I think it says Sue Silver. Let's see something. Yeah, this Suncor Energy, somebody's asked me about here. I mean, momentum looks pretty horrible overall, right? When we look at this this part down here. You are hitting some support levels right here. Currently trading up a little bit. When I look at this and I kind of take this across and see if I can do this. I mean, I'm not really finding some support in this range here. May have support down here. Obviously, there is a lot involved in the whole energy stocks that peaked out, and all sorts of energy peaked out last month. And, what am I seeing here? I mean, what are you guys seeing here? I'll give you two things to look at, right? We're looking at the aileron, and we're looking at the Commander Series autopilot and altimeter. I mean, you're at a really good supporting point here because you only see two. This is a really good lesson that I share with you. I'm going to share with you again. Notice, I'm going to expand this a little bit here. Maybe. There we go. Notice there's only two lines here, right? We have this line, the blue line, and we have this, the red line, right? So really important to look at that. So we have the blue line, the red line. But other lines we see, look here, 1, 2, 3. Where's the green line? 1, 2, 3. 1, 2, 3. There's green everywhere, right? We always have a package of 3. Why is there only 2? That's because the green line is the same line as the blue line. In other words, when you look at that, you have to say that the line itself is actually underneath, and it is a double supportive level. So the question is, what does that mean? Well, when I look at that as a really good level. If we start to hold that level really strong, there's a lot of buyers that really are coming in at that level to support the stock. And yes, if you look at this, kind of good, if you look here, the cruise and the stall on the bottom right? Cruise and stall, see that? See the two lower the numbers? First you have the lift, and then you have the cruise, and then you have the stall. That is the same number, 1995. That means that is massive support at that level. Good news for those that are thinking about putting on a position potentially if momentum starts turning around a little bit. That's the big issue right there, right? Somebody's asking me about RRR, Red Rock Resorts. This is going to be one of those that I would put in my bag for, hey, look for the shorts opportunities here. If, in fact, we do see a resurgence of the virus and lockdowns and masks and all that. On the other hand, if we see a resurgence of the reopening, moving up. Right now, very, very, very shallow momentum indication. Holding its line really well at about 40 and change. 40-30, I would say that is. But you got there's a lot of mess here. When I look left and when I see that in this range, there's all sorts of messiness, right? I got to get through all that price and all this. That's not something I really want to trade, and that really excites me at all. So sorry about that. Just not. Somebody asked me about Baba. Baba. Yeah. Same thing with Didi. The Chinese government is just being, jerks. So I'm not sure how that's going to work out for these stocks right now. But if you want to take a long-term view of this, obviously Baba was 320, now 183 for a pretty decent company. But right now you're in the space of China really coming down, clamping down. Hood came out yesterday, which is Robinhood Markets, down from a high of 40.34, currently trading at 33.90 today. I don't have a lot of love for that. Workhorse, I'm still kind of looking at this and waiting. We saw a couple of really big spikes here. This doesn't look like a big spike, but it's from 10 up to 12. It's 25% in a day right there. You have to look at this, and we see what's interesting about this and different than some of the other features you'll see when there are big moves to the downside. This is a very controlled and a very sequenced move just to kind of, sequence it down. But what I'm seeing here now is the momentum is really just not there. We know that. We can see where the stock is. It's no mystery. But at the same time, we got a really good support level right about the 10.5 level, right? We're talking about 1087 is that level that has a really nice support right here. It doesn't seem to want to get below that. Now, if it does, you got a range, right? This range, I'll kind of move this box and show you what I'm talking about. There's nothing really when I look from right to left. I look this way. I don't see anything down in this whole region, kind of going across the whole chart here, until we get to the bottom of that. And that's in the sub 9 level, right? That's in about 880. We need to see this rotate up a little bit. Now, one of the things, a big thing I like to look at is, if we can find one thing that a stock could do to do well. Well, in this case, with this stock, is all they have to do is get something from the government on their post office deal, and this thing can just rock. I would expect this thing to be, back up substantially to that $18 range up there very quickly if it does, and then break out if we can get a contract on this. A lot of shorts in there right now. Nikola, nothing. I'm not going to talk about that. Facebook hitting all-time high this week and then coming in right now down $4 at 150 at 354. So we're right at some of the midterm support right there. Nothing really terrible that's going to be concerning. Did bounce off beautifully. I mean, you kind of just always like focus in on these, and you could draw some circles on here if you want. Kind of put those on there and leave that kind of thing in a chart to remind you that how well it held or where the resistance was on this. So now what we're looking at right now is areas that Facebook does have, of course, a big following. People looking at this substantially. Somebody's asking about Coin, which is Coinbase, of course, COIN. There we go. Not enough to really get me going. These gaps and these moves, I mean, I'd rather you play the pure play right now. Seems like there's a lot of people getting into this business. Did we go? Yeah, we went over MT already. Yeah, I know, Nick. I know about the infections and all the deaths. I'm just saying, Mike, I get all that. And I understand the rationalization. Not everybody does. And one of the problems you have with this is what if? What if people start getting a little spooked is all I'm saying. It changes the whole thing. K-Web, this is interesting. I want to share this with you. From 100 down to 50, down 50%. This is the Crane Shares CSA China Internet ETF, INET. It's the technology, hardcore technology, cloud, all that in China. Look at this thing. This is nasty. Just keep this on your radar screen is all I'm saying. What else do I like here? Zoom kind of broke out a little bit yesterday. Came in, though, couldn't hold. There's a couple of announcements by, I believe it was, somebody came out with something. Was it Amazon? Somebody came out with something they're going to have two-way videos. This stock spiked yesterday. Zoom is coming back from its low. I mean, Zoom got, hurt. Same thing with like a Piton, right? We saw kind of this thing get really hurt, and that was the whole debacle with this being sued for their the problems associated with the treadmills, and then started coming back. But now there's a combination, I think, of the fact that we're seeing a resurgence in COVID and all that. And then Citrix, just nice. You got to wonder, like, what the heck? How come this thing hasn't done well? Citrix, right? Go to meeting and all that stuff, whatever they own right now. And tech, just it's abysmal. It's abysmal. I mean, it's down from July of the 170s. I mean, just terrible. Somebody asked me about Gush. This is a 3-time multiple. No good. Look at that. I mean, it went from 1,600 down to 70. I mean, it's a reverse split. These things are just, it's a perennial short, those things. If you hold them for a couple of days, but I don't really see anything right here. Go to the core, probably a better place to be. All right, we're going to end it there. Down 80 on the YM, 227 on the SPOOs, and 167. See what happens during the day. Let's take one more peek at something, though. This thing right here. What we're seeing here is a couple of things I want to look at. KRI is a little bit overdone right now. Kind of going to probably fix out today to a level that's a little bit better. I don't see anything really substantial with regard to any movement on this side, one side or the other. Have to see how this plays out after whatever goes on today. Go over to TriggerCharts.com. Take a look at what's going on with the videos there. And you have a profitable week and a good week. Thanks so much for joining me. And I will see you again next week.